Hi, I'm Terry Bailey with Selling Utah Real Estate. The real estate market is going through something a little bit different right now. A lot of people are thinking that the market is going to continue to dip down. We've seen a lot of this, and we're going to start to see some of this. But the thing is, most people think that we're at a place where it's gone down, but it hasn't bottomed out. It's not even close to where it is going to be bottoming out. And interest rates are so high that it's not really affordable and it's hard to make things cash flow. So a question I get asked very often is, what should we be doing now in this market? And if you can get good seller financing deals that have great terms that will cash flow, then yeah, go ahead and buy the deal and you're good to go. But if you can't get that, you've got to make a decision. To be honest, no one knows exactly what's going to happen in this market and how it's going to play out over the next couple of years. There's a very good argument that because interest rates are so high, we're going to continue to see prices dip and then come to a place of equilibrium. And there's another argument that we're going to see them dip a little bit, but then it's going to hold strong, stabilize, kind of stay stagnant and then pick up once interest rates level off, maybe 2024 or 2025. Do I know exactly what's going to happen? The answer is no, I don't know. But I need to make a bet and go forward with it. If we just stay in analysis paralysis, then we won't do anything. We won't have any results to come out of the next couple of years. So especially for the folks who are looking to sell, my opinion is the market is going to continue to drop and then level off a little later. So I'd say go ahead and sell your home now. Yes, it's going to be, $20, $30, $40, $50,000 less than it was a couple months ago, but it's probably going to be the same $20, $30, $40, $50,000 more than it'll be in a few months from now. And then you take that excess money that you had, and now you're buying at a lower price. So theoretically, you're able to sell high, although not the very top, still sell high, and then buy when it gets a bit lower. The risk, that'll come if prices don't end up dipping off. The government says, hey, all of a sudden we want to lower interest rates again, and then prices will then start to climb back up. And then at that point, you sold your house that you probably had a better interest rate on to hopefully take advantage of a future point that didn't make a whole lot of sense. So again, it comes back to making a bet. And you need to put your money where your mouth is. Now let's take a look at the alternative. You don't sell now, you don't really take any action if you need to sell. And then you hold on and the market continues to dip and dip and dip. And then you sell when you actually have no other options. And at that point, all the appreciation that we picked up over the last 2 or 3 years is pretty much gone. But you're also buying in the same market that you sold in, except for with a little higher interest rates. So, it's still a losing scenario. Or there's a third option, which is what I'm currently doing. And it's use the equity that you have currently to open up a line of credit. That way it's open and usable. And then wait a little bit until you can find a good deal that'll cash flow. And it'll cash flow enough to pay off whatever monthly payment comes from your HELOC, your home equity line of credit, or your home equity loan. If you do that, you'll still be able to keep your low interest rate on the house that you're buying, and then at the same time buy a house at lower prices, and then eventually refinance when it makes sense. But especially if it's cash flowing as you're buying it, enough to pay off that monthly payment from the HELOC, then to me, that's a good deal and it's worth buying. And again, you just take and refinance whenever the time is right, pay off your HELOC, have a lower monthly payment, and then put good long-term debt on that new property. And the bonus option is what we talked about in our last video, but seller financing deals that cash flow up front that are at least for a 3 to 5 year term is ideally what I'm buying at this point. And the punchline of this whole video is take advantage of the opportunities that are in front of you. This new market is going to provide new opportunities. They're probably not going to be the same opportunities that we had in the last market, which how we took advantage of those was buying new construction houses, letting them appreciate, and then we have a bunch of equity when they close. So the new construction play doesn't really work anymore, but there are these other new plays that continue to work. So if you can adapt well, you should be really excited and looking forward to the next 12 to 24 months.